Welcome to the Multifamily Investor Nation podcast. I'm your host, Whitney Elkins Hutton, Director of Investor Education here at PassiveInvesting.com. And I'm so excited to have with us today, Vanessa Alfaro. Vanessa, welcome to the show.
Hi, Whitney. I'm so excited to be here with you finally and ready to go deep into this.
Excellent, excellent. Well, I know you've got this deal, Diamonds in the Mississippi, 232 units in Vicksburg, Mississippi. And by the way, guys, this is a portfolio of a deal. So 3 different properties here. I'm super excited to talk about this. But before we dive into this, tell us a little bit about yourself, your background, and how you got into the multifamily space and where you're at today.
Sure. So my name is Vanessa Alfaro. I am the founder of Venus Capital Partners, which is a multifamily private equity firm that is focused on technology and innovation in order to provide real estate opportunities. Right now, we have been focused for the last 5 years in multifamily, okay? But it doesn't mean that we are not open to buy other asset classes as well. Okay. I'm also the founder of another companies not related with multifamily and artificial intelligence education company and SaaS company, a production company that I have with my husband that is about cars. And I did for 15 years before going into multifamily. I had a marketing company in Latin America in 2 different countries, actually, in Latin America. So that was a lot of fun.
A lot going on here. So when did you transition from marketing into multifamily?
Well, I run these companies for 15 years. Okay, I was born in Venezuela. So that was my first company. And I was the youngest entrepreneur in that country when I was 27 to have like one of the biggest marketing company out there. And then I actually moved the company. I created another headquarter in Panama. Uh, After that, I moved to the US more than a decade ago. And with my husband, we created Auto Projector, which is a production and publishing company that is focused on car. So I was still doing a lot of marketing, and more than marketing, I was running the company with him. Okay. And I really always wanted to go into multifamily. Always. My husband and I were very interested. And after the production company was actually running pretty well, we decided that he was going to take care of the production company and I was going to move to creating a private equity firm. And that was 5 years ago. And that's how Venus Capital was born, which, by the way, 5 years ago had another name. And we just rebranded the company just because our focus on technology and innovation, and we decided to rebrand it to Venus Capital Partners.
Such an interesting story. Well, I am so excited to dive into this portfolio of properties. Diamonds in the Mississippi, 232 combined units in Vicksburg, Mississippi. When did you close on the portfolio and what did you purchase it for?
That was last year, and we purchased this for actually $11 million, 232 units. Okay,
Okay, so
$11.5 million.
$11.5 million. And I believe like when we were in the green room, you said that you closed on it in April, correct?
Correct.
Yeah, so very interesting times with the interest rates run up, right?
It was very interesting times overall, because when we got this property at the end of 2022, okay, nobody knew about this market, okay? And remember that by 2022, everybody was still very focused on primary markets, right? So everybody was going into the big cities as well. And I has been always into secondary and tertiary markets. Actually, this was not my first property in this small market. We have another property, 80 units that we purchased maybe 3 years ago. And my company was the sponsorship partner, okay, of this small group of new syndicators that were starting in the business. And that's how I got interested in that market. And because of that deal, we got a phone call from a broker about this property. And this market has been performing so well for us in all our assets in general. People did not believe in tertiary markets at that point. So it was very interesting. And that's why I choose to talk about this deal, because it was very interesting from the acquisition to the closing. And also because right now, people is more open to go into tertiary market. You hear more about going to these suburbs, okay, cities.
Well, let's talk about how did you find the deal?
Um, my partner, okay, which is actually the asset manager of the 80 units, received a phone call from, she actually received a few phone calls from someone that she didn't know. And this person was asking a lot of questions about our other 80 units. And one day she received another phone call and he said, I am a broker and I have someone that is selling their properties. He owned it for 20 something years. Okay, since he developed these deals, he has been calling you and asking you questions about your other properties because he wanted to know if you are taking good care of your tenants.
Mhm.
And he told me to call you. Okay, and these are the deals that he has, and he want to sell it to you guys. Isn't that interesting?
Wow. So you guys were kind of handpicked.
Yes, yes. And at that point, she takes a phone call and she doesn't tell me anything, but she start working with the underwriting person, okay? And they start doing the underwriting. And a week later, she calls me and she said, "Hey, Vanessa, this guy called me. I have these numbers, okay? The deal looks good, but I have to tell you, I still waiting for a rent roll. I'm still waiting for just a piece of detail." And I said, "I want you to answer this question to me. How much is he selling?" She said, $12 million. How much is that per unit? How much is the rents? How much is he charging for rent? How much are we charging for rent in our property?
Mhm.
And the difference and the upside in the rents were more than $400. And the
So he was on the
price,
market by $400 on his property.
yes, yes. And our property was like just 5 minutes away from the other one. And at that point, I told him, listen, you need to call him right now. And you need to tell him that we're buying that property because like this is really a diamond, okay, that we won't find someone else. And that's how they picked the name diamonds on the Mississippi.
Okay, so are the properties like contiguous? Are they on the same tax parcel? Are they close by? Like, walk me through that.
No, we have two different loans. Okay, we have two Fannie Mae loans. Okay, and actually, the third property we did a joint venture with the third property. Okay,
Oh, but
so
are they closely related? Are they like
yes,
within
yes,
like two or
very
three blocks
close.
of each other? Like, or how are they?
No more than 10 minutes driving from one place to the other.
Okay,
The
so they're kind of
borders.
spread across town.
Yes.
All right. Well, okay. Before we jump into the financings, I definitely want to pick that apart. Let's go through how did you structure the deal? I mean, you guys seem pretty excited. Sounds like you guys were you guys truly the only person competing for the deal?
Uh, I believe he was ready to put that on the market. Okay. But we took it after 3 days. We asked him to sign the contract immediately. So we actually put on the contract, and next week the team were flying already to do due diligence. So we didn't leave space to anybody to look at the deal at this point.
So how did you structure the contract? Like, what was your due diligence period? How long did you have to close? Were there any extensions built in there?
Yes, we're usually very strong with our contracts. Okay, so we had 90 days to close. We have two 30 days extensions. We have a list of due diligence that we have to do. We actually didn't remove our financial contingency until the end. Okay. Um, so it was a pretty easy negotiation with this seller. It was a very easy deal for us, and he was very pleased to work with us. Okay. So he knew that we were in the market. He knew that we were serious. He knew that I mean we went into the diligence, and I think we didn't find anything major. I think that we went into $100,000 more that we will have to put in the property, and he actually gave us a credit for 150,000 or something like that. Okay. So
And
it
how
was
long
a
did you
pleasure.
have for that due diligence walkthrough? So it sounded like as soon as you guys got the purchase sale agreement signed or the LOI signed, you were on the property walking through like the next week. Did you have 2 weeks? Did you have 30 days?
We have 30 days.
30 days. Okay.
I was starting there 30 days.
Okay. And did you bring all of your contractors or was it just your team?
We had contractors and we work with third party property management. So they were there already managing our property. So the third party property management helped us with the due diligence, and they had the contractors to check everything that we needed: the roof, foundations, everything.
Okay. And so it doesn't sound like there was much found on due diligence. What's your business plan for this property? Were you planning on I guess let me back it up. What kind of class of property is it? Is it, were you doing some sort of value add strategy with it?
Yes, this is an old property. It's a 78 and 79 properties, okay? And actually the one that we own there is an 84. So it was a little bit newer. And we did find things in the property, but we didn't find bad deferments. We didn't find issues with the foundation, for example, okay? So we did found that we need to paint the building, and there was rotten wood, okay, in some places, okay? But it was nothing major. And our value play here was actually that the units were completely original, since this person actually developed the property, okay? And so we had all the potential of the upgrades and the increases of the units because they were completely original. And he had some different maintenance, but nothing major. Okay, like for example, the playground, okay, was original. It was destroyed, so we had to put a new playground. And well, then comes the rest of the story. Is that what happened after we close on the deal and we go into the whole storm for the 2023.
Well, let's hold on to that for a second. I do like asking follow-up questions, especially when the deal's closed earlier in the year. Okay, so no real surprises on the physical due diligence. Were there any surprises on the financial due diligence?
Oh, that was another story. The person that was managing the property, he was self-managing the property. But the girl that was actually on site, she was doing everything on hand. The rent roll was handwriting, the books was handwriting. She didn't have a computer. So
So
we
we're
had to
talking about
go one
everything
by one.
1970s. Okay.
Yes, yes, it was very interesting. Everything was 1970s. And if I tell you a little bit more of the backstory, it was very interesting because when we were there, she actually took over this property since the beginning. Okay. And the person that developed this property actually sold the property to this guy like 2 or 3 years later. Okay. He passed away and he was his best friend. And this person that owns the property always wanted to buy the property to him, and he leave it into the will that he will sell it to this guy. So he was very attached to this property, and that's why I think that he was, making sure that good buyers were taking over this.
Hmm. So, okay, so the books are all handwritten. The rent rules are all handwritten. Were there any surprises, or was it actually in good order?
Oh, no, it was in good order, okay, according to what he was saying that it was, okay. But it was a lot of work to go over all that documentation and uh, go and transcript all that information, which right now, okay, you can do very easily with AI, just scanning all this documentation, just put it into AI, and the AI will transcript everything for you in just a blink of the eye. But it was a lot of work at that point.
All right. Okay. So we're getting through, due diligence. Did you guys have any earnest money down at this point in time? Was any of it
Yes,
hard?
no, we didn't. They didn't even ask for her money. We just put the 1% as we do in all the deals, and our money was not hard. at any point. It
So
was
you're
very easy. It was very easy negotiation.
no problem, no problem. It sounds like the story happens after the deal closed. So, so I'm curious. The originally he wanted $12 million, but that's not what you closed at. So, did you retrade somewhere in there, or was your original offer lower?
We offer less. We offer 11.6.
Okay, and then you got the $150,000 credit. All
Yes.
right, let's talk about how you financed the deal, because it sounds like there's a unique strategy that you used here. So walk me through like all the different types of loans that you have on the property, the interest rate, was there any recourse, prepayment periods, stuff like that?
We financed this with Fannie, Fannie Mae. We had a 5.75% interest rate, 10-year balloon, okay, and a drop down penalty, okay, if we want to get out of the deal. It was interesting just because it's a tertiary market, okay. But we did it with Lumen, and one of our partners is actually a mortgage broker. He is the one that do all my deals, all the deals that I have so far as an operator. He has done it for me, and he's just really good in what he does.
Awesome. Now you mentioned, and correct me if I'm wrong, that two of the properties were, the lending was Fannie Mae, but was the third property Fannie Mae as well?
Yes, the third property, which ended being a joint venture, which is 25 from the 132, that's also with Fannie Mae.
Okay.
Mhm.
All right. So talk to me how you structured all this, right? It sounded like you raised capital. There's multiple general partners on this deal. How did the general partnership get structured? Let's talk about that.
Well, we had a 70-30 split, okay? And in between that 30%, okay, we have all the GPs. So we are 3 partners, okay, in that deal, including Venus Capital Partners. The other 70% is for the investors, and I believe we had a 6% preferred return, okay, for our class A2 investors, and we had some class A1 investors who got 10%, okay, preferred return.
And then did those preferred returns, the ones that got the 10% pref, did they also participate in the 70-30 split?
Yes.
Okay.
Yes. Yeah,
Okay.
we were very generous, and they got 10% cash on cash, and they actually get part of the equity up to 25% annualized return. Okay. And after that, our split goes 50-50. Okay. Because the projections were we always do conservative projections. Okay.
Mm.
That's it. We always do conservative projections, um, uh, but we just wanted to show the investors that we were not planning to make more than 25% annualized return. We don't do that in any of our deals. We don't show more than 25%, regardless of the potential that the deal has.
Okay. All right. So, and you raised, so correct me if I'm wrong, you raised on 2 deals, and then the third one that's in this portfolio was a joint venture, correct?
Mhm.
Okay.
Correct.
So how much capital did you raise? And then how was the joint venture figured in there?
So as Venus partners, we raised $5.5 million out of the $6.2 million that we have to raise. So usually when we go into deals with other co-partner or another sponsor, we usually raise most of the money, 80% of the money, not because it's our choice, it's because of how ended happening. On the joint venture, we just keep on the partners that were in the GP, okay? We just put a little bit of money, each of us, and we just keep the deal. We're planning to keep the deal for a long time.
Got it. Got it. And what was your loan to value, right? So if you put it under contract for 11.6 and you raise just over 6.2, what was the down payment and what went to your business plan?
Yes. That's interesting because usually what you see in deals from 2023 and 2022 is a 65 or a 50% loan to value. Okay.
Mhm.
We had a 80%, 80% from the lender. Actually, the lender gave us 80% of
That's
those
amazing.
$11.5 million. It was incredible, okay? Something that usually never happen. And that's because the cash flow of the property supported so much. We priced the deal so well. And the seller didn't have fake expectations of the deal. Even at $12 million, it was completely worth it, okay? Because of the cash flow of the property. Now, the reason we raised $6.2 million is because we raise a lot of money for the CapEx. Okay?
Mhm.
And we want to make sure that if we hold this deal for 7 years, our business plan is between 5 to 7. But if we hold this deal for 7 years, that we will have enough money in reserve for our capital expenditures. But we actually got 80% LTV.
Amazing, amazing. All right, so let's see. We went through all of the capital raising. Now, it sounded like after takeover, there was an interesting story here. Tell me how a takeover went.
Well, it was interesting because everything started happening in the economy, right? And we face it like the challenge that, of course, our projections were to increase the rents for $150, okay, and $300 per unit. We're not even going to the $400. But on the renovated units, we wanted to go to 300, and on the non-renovated units, we wanted to go to $150. Now, it was very easy to go into $150, okay? But going from there to the $300, okay, we started seeing the challenge just because the economy started to change, okay? And the good thing about this market is that there is not enough affordable housing, so they have a lot of people commuting from Jackson to this city as well. But we have to step down on the renovations, okay? Because we were seeing that we will fill the units to $150 faster, even without renovation, that filling the units with the $300, okay? So we step down on the renovations and we hold on that. Even right now, we're holding on renovating so many units just to make sure that we can keep with the demand and you are not overspending on the renovations.
Hmm. And so for your investors, how are they orienting to that change?
Well, for the 10% cash on cash, okay, they still got their 10% cash on cash, okay. But for the class A2 that they were getting 6%, they only got 5%, okay, of their return. Okay. The difference was not huge, okay. It's just 1%, and we has been really very grateful that we purchased this deal in that price at the right time, because we have seen in other deals, even in some of my other deals, that we have to stop distributions. Okay, so you have here for this year many capital calls and many syndicators just stop distributions overall in all the portfolios. So the fact that we're able to pay 5% on a deal and the 10% investors are getting their 10% is a huge win really for them.
Awesome. Okay. Well, two questions to wrap us up today. What did you find that was easy that you thought was going to be a little bit more difficult? And then turn that around. What did you expect to be difficult that you actually found a little bit easier?
I expected the negotiation to be a little bit more difficult, but it was really easy to go through the whole process of this is our contract, this is what we need from you. Okay, we didn't find any pushback from the broker, from the seller, like, hey, we want this money to be hard in a week, things like that that were, that you see a lot. Okay, for the last 5 years in multifamily, we didn't find any of that. So that was really easy. What we found harder is on the asset management and on the operation of this deal. It has been really hard to keep an eye on the property management, just because it's a small market, and as a small market, it's hard to find people that work. So all the contractors that we have, okay, it has been a lot of work. I thought it was going to be easier just because we have another deal there and we went through that. But now when we jump to 232 units, okay, it has been more complicated to find people that work for us and people that give us the price that we need. So that hustle, okay, with the operation has been harder of what we expected, because we had experience with the other deal. It has been pretty easy so far.
Hmm. Well, Vanessa, it's such a knowledge and expertise that you shared with us here today. If people want to follow you and find out more about you, how can they do so?
Oh, well, they can go to venuspartners.com, which is our website. And you can find me on Instagram, Vanessa Venus Capital. You can find me on Facebook and on Twitter, or you can email me at vanessa@venuspartners.com. I'm happy to help.
Well, again, Vanessa, thank you so much for being on the show. And we look forward to hearing about future deals.
Thank you so much.